Hello and welcome to Investing Iguana, the place where we delve deep into the world of finance with a keen eye on emerging trends and regulations. I'm Iggy, your guide through the complex maze of investment opportunities and challenges. Today, we're turning our focus to a hot topic that's reshaping the financial landscape in Singapore, the Monetary Authority of Singapore's MAS, new stringent measures on cryptocurrencies. As an investment analyst with years of experience navigating the ebbs and flows of financial markets, I'm here to break down what these changes mean, how they'll impact investors, and what future lies ahead for the crypto world in Singapore. Let's dive into these pivotal developments and understand the new era of cryptocurrency in the Lion City. Singapore is set to ramp up its regulations on cryptocurrency service providers, marking a significant move in the city-state's approach to digital currencies. The Monetary Authority of Singapore, MAS, has announced a series of tighter measures, reflecting a careful and considered response to feedback on proposed regulations. These new rules are poised to reshape the landscape of crypto services in Singapore, aiming to balance innovation with consumer protection. Key among these measures is the prohibition for crypto service providers in Singapore from accepting payments via locally issued credit cards. This step is aimed at curbing potential financial risks for consumers engaging in the volatile crypto market. Furthermore, these providers will no longer be able to offer incentives for cryptocurrency trading or provide financing, margin, or leverage transactions for retail customers. This change, set to roll out in phases beginning in mid-2024, is a clear signal of MAS' commitment to consumer safety in the face of the speculative nature of cryptocurrency trading. The MAS is also introducing comprehensive rules regarding business conduct. These include mandatory requirements for crypto service providers to publish detailed policies and procedures, particularly those governing the listing of digital payment tokens. Additionally, they must establish robust procedures for handling customer complaints and resolving disputes. Ho Hearn Shin, the Deputy Managing Director of Financial Supervision at MAS, emphasized the responsibility of digital payment token (DPT) service providers to protect consumers who use their platforms and services. However, she also cautioned that these measures, while beneficial, do not fully shield customers from the inherent risks and speculative nature of cryptocurrency trading. Singapore's proactive stance on regulating crypto services is part of a broader effort to manage the risks associated with digital currencies while fostering a secure and dynamic fintech environment. This includes the implementation of the Payment Services Act in January 2020, a comprehensive framework designed to regulate payment and crypto services offered to the public. In a continued effort to tighten oversight, MAS mandated in July that crypto firms must safekeep customer assets under a statutory trust. Furthermore, restrictions have been placed on these firms to prevent the facilitation of lending or staking of retail customers' assets. Significantly, in January 2022, Singapore introduced stringent advertising restrictions for crypto service providers, limiting their marketing efforts to their own corporate websites, mobile applications, or official social media accounts. This was a move to minimize public exposure to potential risks associated with crypto investments. At the Singapore FinTech Festival 2023, Ravi Menon, the managing director of MAS, offered a critical assessment of cryptocurrencies, stating that they have failed the test of digital money. Menon highlighted the issues of cryptocurrencies as a medium of exchange or store of value, pointing to the substantial losses suffered by many investors due to the extreme price volatility. As an experienced investment analyst, I'll share my perspective on how these changes could shape the crypto landscape in 2024 and beyond. 1. Impact of stricter regulations. The MAS decision to impose stricter rules on cryptocurrency service providers is a game-changer. By banning credit card payments for crypto transactions and prohibiting promotional incentives, MAS aims to safeguard investors from impulsive and potentially risky decisions. This move could lead to a more mature, less speculative crypto market in Singapore. While this might initially slow down the rapid growth of crypto trading, it paves the way for a more stable and sustainable ecosystem. 2. Shift towards institutional involvement. With these regulations, we might see a shift in the crypto landscape from retail to institutional investors. Tighter regulations could make Singapore an attractive hub for institutional investors looking for a regulated and secure environment to engage with digital assets. This shift could lead to increased stability in the market and potentially attract more global crypto businesses to set up shop in Singapore. 3. Enhanced consumer protection. The focus on consumer protection is paramount. By requiring crypto service providers to publish detailed policies and establish procedures for customer complaints, MAS is ensuring a higher standard of accountability. This could lead to greater trust in crypto services, encouraging more cautious and informed participation from the public. 4. Potential for innovation and growth. Singapore's stance on crypto is not outright restrictive, but rather a balanced approach towards regulation and innovation. As MAS continues to encourage technological innovation in the fintech sector, we might witness the emergence of new, more sophisticated crypto products and services that comply with these regulations. This environment could foster innovation, leading to growth opportunities within the crypto space. 5. Long-term market outlook. Looking ahead to 2024, the crypto market in Singapore is likely to undergo a period of consolidation and maturation. As speculative trading diminishes, the market might see more stability. Investors should be mindful of the potential for a shift in market dynamics and be prepared for a landscape that prioritizes security and compliance over rapid growth. Conclusion. In conclusion, while the immediate effect of MAS regulations might cool off the fervor around cryptocurrencies, in the long term, it sets the stage for a more robust, stable, and trustworthy digital asset market. For investors, staying informed, adapting to the changing regulatory environment, and focusing on long-term strategies will be key to navigating the crypto market in Singapore in 2024. As we wrap up today's discussion on MAS tightened cryptocurrency regulations, it's clear that we're entering a new phase of digital currency oversight in Singapore. The measures are set to transform how crypto services operate, affecting everything from credit card payments to advertising strategies. Remember, while these regulations aim to protect consumers, they also underscore the inherent risks and volatility in the crypto market. I'm Iggy from Investing Iguana, and it's been a pleasure to guide you through these significant changes. If you found this insight valuable, don't forget to like, subscribe, and hit the notification bell for more updates on how global financial trends can impact your investment journey. Stay informed, stay vigilant, and let's continue to navigate the ever-evolving world of finance together.